Hey, this is Justin with DayTradeTheMarkets.com. It is April 2nd, and I wanted to take a quick look at the crude and gold markets today. I wanted to look at the gold market because there was a pretty major sell-off in gold, about a $2,000 move lower on one contract in gold. Unfortunately, I had an appointment that lasted about all day, and I didn't get to take advantage of that today, but I can still kind of show it and give an example of a pretty solid trending market. But I also really quickly wanted to touch on the crude oil here as well, because if you saw yesterday's video, and if you didn't, I recommend you click the link below and go to the other videos and check it out, because I kind of built a chart piece by piece and really explained the basics of what each of the pieces meant. But the reason I wanted to show today's crude oil as well, because it was literally almost a carbon copy of what happened yesterday. And let me just explain that a bit. In that our first structure of the day was this level 3 selling bar with follow through. And again, when we have a short-term structure like this, a level 3 bar, until that high is taken out or until something else happens further down the line on the right side of the chart to change it, you have to assume that sellers are in control, at least short term. Okay, now that's kind of you're swimming upstream because bigger picture we're in an up market in crude, but short term you have to assume that sellers are in control of that market. And so number one, you would want to avoid the long side. So step one is avoid being on the wrong side of things, or avoid low edge opportunities. So you can keep yourself out of bad trades on the long side and wait until buyers start to come in if you're looking to get on the long side. And number two, you can have a little more confidence to be on the short side. So what we have is that level 3 bar, and then continue with some level 2 aggression bars. Here's another level 3 selling aggression bar, and again we want to see can the high of that hold. Now the caveat here is that this also happened to be yesterday's low, and you know what, if I bring up a 5-minute crude oil chart, hold on one second. Real quickly, here's a 5-minute chart, which is a little bit broader view. You can see we've been rallying up. Yesterday we tested right into this level. Today, this is early on today, we tested right into that support level. So that's interesting. After we tested resistance, and we busted through this resistance later in the day. But let me get back to the 2-minute that we were looking at. You can see that when we tested that level in a little bit bigger picture, we started to see some buyings. It decelerated, and we got a level 2 buying aggression bar. So again, that doesn't mean buyers have taken over. Turns out they did, but it doesn't necessarily mean that at the time. It just is a little bit of a red flag, like this pure wave of selling might be coming to an end. And that's confirmed when we got some follow through higher on this one, and especially when we took out the high of this level 3 selling aggression bar right there. And not only that, but did so on this level 2 buying aggression bar. And this is an opportunity. We talk about what we call our level 3 reversal trade, where we have especially if you have a bigger picture up bias, and then you have a level 3 on the low of the day that has its high taken out and does so on some pretty good strength. Oftentimes that's going to show 7 or 8 times out of 10 that's going to be the low of the day, especially in a bigger picture up market, as I was saying. And when the high of that is taken out and comes back and retested, it often gives us a pretty good reversal type of a trade. But again, you can just see we had a wave of selling here, and here was some evidence right there that buyers were starting to come in. That was confirmed when the high of this level 3 bar was taken out, and we kept having some buying aggression. You can see we sputtered out at the resistance a little bit, and then we broke higher on a high velocity move and a level 3 buying aggression bar. So again, you can see the filter went green early on down there. So again, what's that showing us is just like yesterday, where I broke it down a little more in depth. Kind of the same type of a day in crude oil. The selling wave attracted buying took over, and you can see what happened. We turned over and had made new highs on the day. So just wanted to show that quickly because I thought it was interesting compared to yesterday, and if you haven't seen yesterday's video, I think it's worthwhile doing. So let's have a look at the big sell-off in gold now. Okay, so here is the gold market again. Pretty nice sell-off in gold. Again, this is a 2-minute chart. That's my preferred day trading time frame for gold. We have guys using 15, 20, 30-second charts, guys using 15-minute charts. It's kind of up to you. Just as an example, let me bring a 15-minute chart up here real quick. So here's just to kind of give you a scope of how big of a sell-off we had today relative to the past week or so of activity. You can see, once we opened today, we really sold off pretty hard in gold. Again, this is on a 15-minute chart. You can see this is a day, this is a day, this is today. So just to give a little bit of an example. So going back to the 2-minute chart, just kind of wanted to show it what a good trending market is going to look like. And typically, again, a big vertical move, a trend type of a move, is going to start with a level 3 buying or selling aggression bar. Now, not every level 3 buying or selling aggression bar leads to a big move, but you're rarely, if ever, going to see a big move that doesn't contain or start with a level 3 buying or selling aggression bar. Okay, it's showing you something's really happening, and you want to pay attention to that. So you can see the first major structure of the day is this level 3 selling bar, and again, until that high is taken out or until something else happens further down the road, we have to assume sellers are in control of this market, so you'd want to avoid the long side, and it would give you more confidence to be on the short side, that sort of thing. So you can see, again, the more level 3 bars that just keep coming in. We have an attempted reaction move, a level 3 buying move, that's rejected right away. So that's just telling you sellers are absolutely in control of that market. We test right to the high of that. Next one comes in. Now it happens to be in conjunction with a high velocity move, so we look at that as kind of one wave. And so again, we look at can the high of that hold? Okay, yes. Here's another one. Can the high of that hold? Here's another one. Can the high of that hold? Now that one got tested a bit. There was a little bit of a reaction. We didn't really have a full bar above, but there was some what we call excess on each side of that bar. So that's a little bit of a heads up, but then it just broke lower on another level 3 bar. Another level 3 bar. The high held. It wasn't until this one at the very end where we had a level 3 bar as part of its own wave. Like I said, this one here had its high taken out, but we look at that as part of one wave with that high velocity. Wasn't until this bar down at the low of the day, what turned out to be the low of the day near the close, that actually had its high taken out and had sustained activity above it. So just really showing you sellers being in control of the market all day long, and just kind of an interesting day in gold. Unfortunately, I didn't get to take advantage of it. I was unavailable for a good bit of the day, but wanted to point that out anyway. All right, talk to you soon. Let us know if you have any questions. Thanks.